Hello, everyone. My name is Connor Kroll, and I'm the founder of West Bank Financials. And today we are joined by an incredibly exciting guest, Omair Ahmed. Mr. Ahmed has had quite the experience in tech and finance space with significant experience in data analysis, which I know has been a hot topic in recent years. Now, to start off, Mr. Ahmed, could you please tell us a little bit about your overall career path, your experience in finance, and I guess data analysis as well?
Yeah, so I first started off with, I remember, in 2008, like when, the financial crisis happened and like my dad's job was at risk. And it was like, I think I must have been like maybe like 14 or something. And I was like, okay, like, I don't know, what is this thing that's going to affect my dad's life, like, my life, and I'll have to move and everything. So I started reading business articles, and that's how I kind of started getting into it. So I would read the business portion of the newspaper every day and just try to figure out what to do. But then I got into computer science eventually, where I got into signal processing. So, that got me into machine learning and things like that. But at the same time, signal processing is very closely related to finance. Because, in finance too, everything's a signal, right? Like the stock's a signal, like, what happens, economy's a signal, job, everything is a signal. And how you process that signal is everything. So it's like, okay, this is a really good application of like whatever I'm learning. So that's kind of how so I had these two things going on at the same time. I'm trying to figure out, what does money mean? What does it mean? Like, why are some people rich and some people poor? Just things like that just kind of got me into finance a lot. And over a period of time, I was just able to use whatever I did from my job and my career, which is software engineering and machine learning, into finance. And only recently did I find out that one of the best performing hedge funds in the world, I don't know if you've heard of Renaissance Technologies, but Jim Simons, right? He was a mathematician who, and turns out his co-founder went to the same lab in, I think, University of Ontario, and worked with Jeffrey Hinton, who was the founder of deep learning. So, that's a crazy coincidence, but basically, it's very interlinked.
I see. So you mentioned your main expertise is more focused towards CS. Have you noticed that I guess your involvement in finance and those early business learnings, have those I guess helped you or propelled your CS career at all?
Yeah, for sure. I mean, one thing is, the most obvious thing is finance. A lot of the data is already available. It's one of the few fields where you can just easily access the data. So it's if, for example, if I want to do machine learning, back in the day, at least 10 years ago, it wasn't easy to find that many images about training sets and stuff. So stock data was easy to find. So it's that's one of the ways in which I think it helped. But the other thing is also the mistakes you made, you could feel it in real time, right? So I'll give you an example. One of the earliest model I made was a stock market predictor, a noob. I was okay, let me just dump all of this data into a model and let's see what happens. I got a model that said, okay, I can predict the future price with 99% accuracy, something like that, and crazy high. Then I looked back, and as it turns out, what the model was doing was just predicting the current price and saying the same price tomorrow. And turns out if you did that, you would get a 90% accuracy, right? Because it's so the mistake I made was assuming that they were independent. The data points were independent. But when they're not, today's price does affect tomorrow's price. And the other thing is stationarizing. So it's so basically you shouldn't, to counter that, you kind of have to look at the difference in the stock price every day, not the absolute value. And that's kind of, so yeah, stuff like that has helped so now when for my day job, I write intelligent firewalls, basically, try to protect Microsoft services. And same kind of I try to not get blindsided with the same things, similar things.
I see. So there are definitely some learning experiences from your, I guess, financial knowledge. And I guess on that point, I wanted to ask, because this is a kind of a question that I was really curious about. For a lot of these financial models that you build, I know they use past data. So how do you I guess account for or try to avoid I think it's called look ahead bias, or just how do you account for that?
You don't. There is no way to account for that bias. There literally isn't, right? You just, the only thing you can do is be aware that it exists, and be aware of the fact that you could be making a mistake because of the look ahead bias. And you hedge, right? That's the whole point of hedging, because you could be wrong.
I see. Like implementation of like risk management and stuff?
Yeah,
Okay.
just literally risk management. Like, what are the tail risks? Like, anything could happen.
I see. And then like last thing about this is overfitting. I know that's another common issue. How do you account for overfitting when you build these models? From your experience?
Yeah, so overfitting is a really good question because you never really know. The best way to do that is really good separation of training and test data, right? Like, not just across time. Time is one of the ways to do it when you backtest, right? But also across different industries and stocks. So, for example, there's something, and some, if I model the tech industry, will it work in, I don't know, finance, or will it work in cyclicals, things like that. But also, I think one of the most interesting ways to do, like, most realistic ways to do this is to actually just take a step back and be like, what exactly is this model predicting? Like, just take a deep dive into the model and just think about, like, what is the signal? Because every model is looking at something, even if you use like a deep neural network or whatever it is, no matter what the black box is, everything is looking at something. What is it that it's looking? What's the signal there? Really hard to do, but I think that's the real way to do it.
I see. And then I guess like some of this knowledge, can I ask what like your like education experiences? I guess is that like what university and major you went to?
Yeah, so I did my undergrad in information science and did my master's in data science at Northeastern University in Boston.
I see.
And then I worked for I don't know if you know what a CDN is, but content delivery network. But basically, it's the thing that enables the internet. So I worked for one of the first CDN companies called Akamai, and then I worked for a research lab in Boston that modeled biological networks, so network biology. And then I did a stint at network science lab. Then I went to worked at Wall Street Journal, where I designed their automatic firewall, and then now I work for Microsoft.
See, so it's like a pretty good mixed experience of like data analysis, tech, and like finance. It's pretty cool. I like that actually. But I guess on that note, I was wondering if like a lot of the, like I guess like you talked about like financial modeling. Did you learn that like on site or from school, or was more of that from like personal projects? I guess.
I would say personal projects more, because the way the school system works is you always have this test data, right? Like there's always a data, like even if you go to Kaggle and stuff, like there's always like really neat set of data, and then you chase benchmarks, and that really doesn't work in the real world. Because anything can happen. Like, how will the model predict if your CEO gets hit by a bus? No model is going to predict that. So you kind of have to find the application. So I feel like it's more important. The modeling part is like the supercharger. But you gotta get the baby steps first. Like, do the actual thing that you want to do. So, for example, if you're doing like trading, like actually buy and sell and trade options like manually, and then you can supercharge that with modeling. But
I guess kind of using it as like an additional add-on to like further strengthen. I see. Okay. And I guess to kind of like shift topic a bit, this is more towards like general interest. What like drew you towards data analytics in like the first place? I guess.
Right. I think it's just intelligence, right? Like, what does it mean to be intelligent? I think I was just super curious about that. Like, just philosophical things, like, what is it, like, we all have these things, like, what does it mean to be conscious? Like, I don't know, like, what does a brain do? I don't know. And you kind of go into, like, signal processing and data analytics. What does data mean? And that got me into machine learning.
I see. And how do you like see, or how have you seen like data analytics and I guess ML affect finance in the past years, and maybe like how you expect it to affect it in the future as well?
Right. In the past years, I think it was like the whole Jim Simons thing. I think it was 1980 when it was funded, and like it's the best performing hedge fund in the world with 68% annualized return. I think.
It's insane.
Right. But yeah, like I think most hedge funds do have a quant now. Like it took a while. I think most trades happen algorithmically. Majority of the trades are algorithmic trades today on the market. So it's definitely like so that is like today. But also like there's this history of like signal processing and maths and finance all interlinked, right? Like statistics started off as econometrics, right? And like for example, linear regression, which is like the base for any machine learning, was first used for things like finance and medicine. So it's like it's all very interlinked, I think.
I see.
Yeah.
I guess on the topic of like ML and AI in general, do you perceive it as like a threat to maybe like finance careers or tech careers in the near future, or?
I think it depends on the specific role, right? I think the roles will evolve. So, for example, right now, one of the first things you do, like when you graduate school, you join Goldman Sachs or something, you become an analyst, and your job is to analyze the data, like earnings reports and things like that. I feel like that stuff will definitely get automated. I mean, it is already automated. Like you can just ask ChatGPT today, right? But that just means you get to be a step ahead. So now instead of you having to hire someone to do that for you, you can do it yourself. You can do it like right now. And it also drives transparency, right? So it's like, for example, there's less mistakes. Like if you, for example, if someone wants to invest in commodities and coffee, for example, there's less room for error because everything will be analyzed. The data will be right there. The analysis, so less room to make obvious, silly mistakes. So I think it's both. It's like it really depends on like if you can use AI to actually become a better investor, I guess.
Mm-hmm. So like a lot of it comes down to the person and how they end up using like AI. I see. Okay. And have you used AI for like any maybe personal projects or modeling?
Yeah. So I'm actually working on a project like I think I sent you the Substack too. Right?
Yeah. Sure.
So like my goal is to kind of evolve that. So I started off like, for example, with my own personal trading experiment. When I first moved to New York in 2020, I got I think $8,000 in relocation package, right? So it's like just to like move your stuff and like set things up and rent a place. I put that in the market and started investing.
Nice.
I think as of today it's at 85,000, like in 5 years. Yeah.
10x in 5. Wow, that's a very impressive.
Yeah, it's documented on the newsletter too. Yeah, the Sharpe ratio and everything. So, but my goal is to use AI to like automate this process. So like not just me, but anyone can do it.
I see. Yeah. So like I guess like to preface, that you have a newsletter, right? That it's like focused on like finance related topics. I guess did that function as your primary motivation for starting this newsletter, or was it more like focused on just increasing financial literacy and getting your personal ideas out there?
It's for increasing financial literacy and also holding myself to account. Because I think it's very easy to get lucky, in this stuff. So it's like a lot of people I've noticed is like, it's very easy to be in a bull market and think you're the best investor. Everyone thinks you're Warren Buffett, right?
Yeah.
But I think for me, it's just like I need to keep a track of everything I'm thinking, and I need to go back in time and see if I was right or wrong. Because that's the only way you improve, right? You have to accept your mistakes so even in the newsletter, I kind of like whatever mistakes I made, I put it out there. That kind of helps you grow. So it's just holding myself accountable and also helping, because I'm also just some guy, so it's like if I can do it, like hopefully I can tell other people how I've done it and maybe they can do it too.
Mm-hmm. So it's like sort of like keeping a track record for yourself and I guess tracking your past like investment theses and I see. Okay. And then have you seen that have you seen that correlate to maybe like work experience, maybe not work, I don't know how to phrase this, but have you seen like improvements over time due to your tracking of I guess your trade investment thesis in the past?
I haven't measured that directly because it's hard to measure that, but you can definitely see the mistakes. Like looking back in the past, there were certain calls that I was wrong about, and you can just like go. I just go back and read some of that stuff, and I'm like, yeah, you know what, this I was wrong about, and now I know why I was wrong about it, because like it's the reverse of the forward-looking fallacy, right? The bias. So yeah, like it's definitely helped, but I just don't have a way to put that into a number.
I see. Okay. And I guess like regarding that, like what are some maybe like, because I like personally haven't like looked too much in depth about your blog or the Substack at all. What are some examples of things that you've had posted on there?
So for example, one of the things, it's just tracking the things like my biggest wins. So for example, the first thing was like the GameStop thing, right? The thing is, like one of the, that's one of the things that kind of makes it seem like okay, could have been lucky.
Yeah.
But the thing is, to get that right, you have to have, for example, you have to know what a short squeeze is.
Yeah.
You have to know what happens, in a short squeeze kind of scenarios. You have to know, like how long could it last, and you have to know how to trade it, because one way to trade it would be to just buy the thing, but you can also buy options or sell options, and just like structuring that. So that's one of the things. The other things is like, for example, the bank failures of 2022, like Silicon Valley Bank,
Yeah.
things like that. Then there is the whole Nvidia thing, and just like one of the things was like, for example, like how do you separate? Because on the one side you have like you have the big tech growing like there's no tomorrow with the AI thing, but then on the other hand you also have the real estate, commercial real estate is like really suffering, and how does that affect the rest of the economy if it does? Because in 2008 the real estate market like kind of crashed everything. This time commercial real estate has been in a huge crisis since 2020, but somehow it hasn't affected anything but the banks, and even the banks it's been very limited, like it hasn't spilled over to anything else really. The rest of the economy seems to be okay. So it's like that's the kind of stuff. It's like okay, so it's like I'll make this call. Like okay, I think this may not do well. For example, housing. That's what I thought like housing wouldn't do well this year, which so far I've been right about. But also like I don't know how long will it last, right? And housing, I think I was a little bit early. I think I called it in 2022, but it took until this year to actually materialize.
I see. And then is there like an end goal with it, like, or is it just like more like a personal project to keep track of everything, or is there maybe like some like other goals that you have, whether it's like I don't know, maybe starting a fund or something related to that?
Definitely, yeah. So I don't know exactly like how like what structure it'll take. Like, will it be a fund? Will it be like a open tool that subscriber based, like an app or something? I'm not really sure what shape or form it'll take. But my goal is my singular focus is on the analysis and what technology can I use to analyze the data and extract the signal from the noise. So that's the thing that I really want to focus on. How I structure and sell it, like I think that'll eventually come. Like I'm not too concerned about that right now.
I see, for sure. So for right now, it's like more like prioritizing, like I guess, like the research part of it instead of I guess monetizing instead. I see. That's pretty impressive. And have you like implemented any of the I guess machine learning stuff you talked about earlier, or?
Yeah. So one of the things, like for example, is this thing that I came up with called rank shift, which is a very quick and efficient way to measure anomalies, right? There's certain algorithms that I use on a day-to-day basis to kind of try to extract the signal from the noise, like inverse log frequency is another one. So these are algorithms that I use at work for the firewall, but I feel like it also applies to this space. Because, for example, the thing is like, how do you one is like extracting signal from noise. Like, for example, you look back the last, like, what companies should you pay attention to, right? That's the first problem. And then when you pay attention to it, like if something pops, why is it popping? Is it a structural thing? Is it a fundamental thing? Or is it just like noise? Because sometimes things just pop for no reason, like, and still you find yourself finding,
I see. And then I guess, what process do you go through when you're like trying to choose like these different topics? Because like you mentioned, like maybe like a company that's had some like recent influx in trading volume or trading price. I guess how do you choose your topics essentially?
What do you mean?
Like how do you choose the topics that you decide to write about in your blog? Like what is?
Oh, okay.
Like like I guess walk me like through like how the process would go of when you're making your investment and then writing about it.
Right. So it goes back into like what I feel like I'm good at that the rest of the finance industry might be overlooking, and that is with the rest of the finance industry, they have a bias to action. what I mean by that is because everyone has a day job, they all have to do something every day. They all have to wake up in the morning, go into work, do something. They're not going to just sit around and not do anything. But sometimes to not do anything is the best thing to do. And I feel like I can do that because I have another job. So I'm not really worried about trading. I don't care about arbitrage. I don't care about like trading volumes. I'm not trading at all. But what I do care about is structural, high level. Like if you had to go to the moon and look at planet Earth and be like, what is happening? That's the kind of question I try to answer in my own brain, like to get a sense of what's happening. So start with like geopolitics, for example. Like, is everything stable? Like, is there an oil crisis coming? Things like that. Are commodities stable? Is gold stable? Like once you have that, like okay, then you go into the currencies. Like are all the currencies, like how's the yen and the dollar, like how's that doing? Sometimes that can affect a lot. Like the carry trade was like a big thing, right? Then you go into like zoom in a little bit, go into the US. You're like okay, like in the US, like how's everything? Like how's the M2 money supply? Like how's inflation doing? How's the jobs report? Because that inflation and jobs report directly decide what Jerome Powell will do at the Fed, right? That decides the interest rate. Now you have the interest rate. Interest rate will go up or down. If it goes down, there's certain things will happen. If it goes up, certain other things will happen. So just to give you an example, if it goes up, companies with heavy cash balances like Apple and Microsoft, they do really well because they're just sitting on cash and they get higher interest. If it goes down, like companies that have a lot of debt are at an advantage because now they pay less to service that debt. Then you go into okay, like what is the time value of money that affects growth stocks, like so it's you just zoom in, like it's a top-down view until you get to eventually somehow you end up in technology. But I have a different view of technology as in investing. Maybe we can get to. But yeah, that's kind of how.
I see. So I guess kind of focusing more like the macroeconomic level and slowly going down and pinpointing the company. And then have you noticed that I guess your past job experience or education has that made that part of the analysis a little bit easier, or made any part of the analysis easier? And how so?
Yeah. So I mean, machine learning for sure, right? Like because it tells you how to act, like it tells you what even data is. Like what is it? Like how do you measure something? Like for example, one of the biggest things I've learned is people like when you have a high growth stocks. A lot of times people are like, oh, this is overvalued. This Tesla is overvalued, for example, and Nvidia is overvalued. And yeah, like it's been overvalued when it was $80, and it's overvalued even today. But when you look at it from a static point of view, like you look at the earnings multiples, you're like, okay, like it is overvalued. But what does that mean? If it's overvalued today and it keeps going up and it's overvalued 5 years from now, is it really overvalued? And like why do you So how do you put that? How do you translate that, right? Like why is it overvalued when it's actually not? And the way to look at that is the growth rate, and it's like growth, like 7% growth rate means it's going to double in like I think 10 years or something like that, right? And it's compounding and it's exponential. So machine learning kind of teaches you what exponential curves are, and it tells you how something can go from 0 to 1 billion in like a really short amount of time. So growth rates are super important. The other thing is just linear regression, right? Like how do you have a bunch of signals and you have a signal output. Like how do you measure let's say A, B, C, D are signals and Z is the output. So how do you measure what effect B has in Z? Linear regression kind of helps you tell that. Okay, like for every 1 unit increase in B, you get a unit drop in C or Z, or unit up in Z or something. And that mental model like helps you to understand these companies a lot. Like a simple thing would be like, okay, like for example, if electricity costs go up, what difference would that make in a company like CoreWeave that sells AI basically a data center for AI, right? So their costs go up, and so their earnings go down, and like that sort of thing.
So kind of building like a deeper understanding past maybe like the base level of like value investing or using like DCFs or whatever.
It's more just the mathematical fundamentals of how one thing affects another.
Yes.
Like another way, like just to give you another example, is like this thing called network science. I know if you're familiar with it, but it's basically it tries to translate most problems into a graph, right? So it's like imagine there's like A and B, there's a node A and node B, and then there's an edge in between. You build a whole graph out of it. Social network, for example, is a graph, but you can have a graph of companies where, for example, the edges between them is the correlation between the stock price, right? Then you get clusters, and that's one way to analyze stuff too.
I see. And then I guess how would you recommend someone that has like no idea about this? What's the best approach to get into this area to build knowledge on this topic? Maybe some resources, or I guess a general good approach.
I can compile a bunch of resources and send it over.
For sure. I can attach it.
Yeah.
All right, awesome. Thank you. And then I guess on that note, have you seen that, like, I guess, or have you ever considered, like, or I don't know in the past, have you had any, like, more fintech-oriented jobs, or have you ever considered applying for more fintech-oriented jobs?
I applied to many, but somehow I never got one, so
I see.
it's funny.
I understand. It's a very tough job market.
Yeah, I don't know what it is. Just never got a job.
Yeah. Okay. I guess. Hold on. Just the camera here.
I really wanted to work for Fidelity when I was in Boston.
Fidelity?
Yeah.
What role would that have been? Or I guess with
like a quant.
It's a like overly competitive space. I guess like on that note, what do you because for your past job experiences you have like worked at Microsoft, right? Or I guess what are some barriers of entry for someone that would be looking to work at Microsoft, or have your like job roles in the past? Because I know that there is some competition behind that as well.
I feel like the best way to learn is to just do stuff, right? Just do a bunch of projects together, go to hackathons, and like that's helped me a lot. Like even if it didn't help me with like networking as much, it just helps you broaden the view. Like for example, it exposes you to potential mistakes, and every potential mistake you come across is a learning opportunity, and that just helps you with the interview. Honestly, I feel like the interview process, like at these bigger companies, is very it's not perfect. It's very structured. It's very one-dimensional, and if I'm honest, like I feel like that the way that works is you kind of have to be really good at just one thing, and if you're good at that one thing, which is lead code, then you kind of that kind of decides if you get it or not. I don't think that's a good approach to joining a company. Like I don't think that applies to anything else really. So I feel like I wouldn't focus on being good at lead code, because I don't know if that translates to other things in the world, but
I guess also now that you mentioned hackathons, I was wondering if you've had like maybe I guess apart from the Substack, any other like business ventures or entrepreneurial ventures you could call them, and if so, what were they?
Yeah, so I started a grocery delivery startup with a friend in 2012 I think, or 2010 or something like that. We went like door to door delivering stuff. We had a website, like all of that. But like I feel like at the time, like my parents wanted me to focus on education and stuff. Like I was in undergrad, so that didn't really take off. Like it was getting traction, but like I kind of had to drop it.
You guys, what were like the main learning lessons, I guess, from that endeavor?
I shouldn't have given up. I think I should have just today Instacart is like a $20 billion company. So it's like I feel like just being bolder, take more risks, be more bold, like, and just power through and just do things. I feel like I was a little bit scared at the time. I was like, well, what if this doesn't work out? I'll be on the streets,
Yeah, that's fair. So definitely having commitment into what's it called, some endeavors happens, I guess. But I guess like related to like entrepreneurship, what would be like maybe some, not like I guess ideas, but some specific industries you'd be interested in getting into in like the coming like 5-10 years, or industries you think would be worth going into?
I feel like things that can take a lot of personalization, might be good to get into. And what I mean by that is, like right now, for example, a lot of things like that laptop you use, right? It's not customized for you. It's just something that Lenovo makes because economy of scale, right? Most things we buy today are based on economy of scale because like if you make 1 unit of something, it's really hard to do. But if you make like 1 million of it, it becomes the unit cost becomes like really, really cheap. And I feel like AI is going to might change that equation a little bit because it's going to make it cheaper to make just 1 unit, and especially when you combine it with things like 3D printing and so making 1 unit of a bespoke thing, which today makes things really, really expensive, like watches and carbon fiber bikes, super expensive, right? Because the only reason they're expensive is because they're bespoke. They're handmade, right?
Yeah.
And I feel like those things will become more widespread and cheaper, and we might get to a point where we have like a custom, like you want your laptop to have 2 screens, maybe someone an AI would design it for you, and some other just send it somewhere, and some manufacturer will manufacture that based on an AI generated design. And so I feel like that might become cheaper. So anything that needs customization, healthcare as well.
I see. So kind of like a transition away from like the traditional like mass production of like singular products. Okay. Do you think that would maybe have like any effects on how I guess traditional supply and demand works? Because like wouldn't that affect supply in some?
It would, yeah, yeah. It'd be very interesting to see how that goes, but I don't think I can predict how that might play out.
Of course. All right. I guess we'll transition back towards the Substack and also your personal investment knowledge. I was wondering, what like specific market insights have you seen the past couple of years that like truly surprise you, or something that you weren't like expecting?
I think the resilience of market has really surprised me. I think after 2008, everyone was like super scared of the markets. And then when 2020 happened, I think the speed at which we recovered from that was like astonishing. I don't know how that happened. Like maybe money printing was the way, like that was all that we needed, but it didn't work in 2008, and so I don't know what changed this time. Same thing in 2022. Like all these banks collapsed, and we still didn't have like a bank run. It was very limited to the Silicon Valley regional banks thing. The tech bubble burst in 2022. We don't even talk about it. So I think it's very surprising. Something's changed. Like markets aren't as fragile as they used to be, and I wonder if it's the spread of information, because I wonder back in 2008, like people, when information didn't flow as quickly as it does today. Like, today the federal Jay Powell will say something and it's instantly on your phone, and like there's memes of it, and like I don't think people paid that much attention. The only way you could consume that was through CNBC or Bloomberg or something, and it was like one piece, one dimension that you were looking at. Now you can look at 10 in a segment. Maybe that changed things, but that's the thing that really surprised me.
So perhaps like people are more prepared for these
I think so,
type of like catalyst events. And do you think that's had maybe like an effect on like how market cycles function, like volatility as well?
Yeah, I think because it underprices tail risk, right? Like if 2020 the whole world's economy just stopped on a dime and nothing happened, like in a 6-year period, nothing collapsed, hardly anyone went bankrupt. Like I'm talking like obviously not from a health perspective, but like the economically, right? Small businesses were hurt a lot, but the bigger corporates, most of them were fine. Like nothing really happened in the grand scheme of things, and that's surprising. Like so that basically tells you, it makes you overconfident, right? Like if you're a big fund, if that could happen and nothing really happens, and now if there is a big systemic risk, you might just decide to hold instead of sell, and that might be a good thing even, because it makes things more resilient.
On that note, I don't know if you've heard of this as like a positive feedback loop in like passive investing. Like people like talking about holding through these, I guess, economic downturns. Do Do you, I guess, believe in that positive feedback loop of like, I guess, more people just holding in the S&P 500, then reinvesting, leading to, I guess, like a consistent upward trend with no, I guess, like significant downfalls, just a positive feedback loop overall?
Yeah, I definitely think that. I feel like at the bare minimum, like an average person should just put it into a S&P and just forget about it, just keep investing into S&P. It even changes the equation of the whole 60-40 stock bond thing, right? So maybe you don't need 60-40, maybe you need 80-20, like, you know. Yeah, I do think S&P has been very, very resilient. But the thing to keep in mind is on the flip side, I think that's a very US only phenomenon, because other countries haven't done as well, like Germany or UK or Canada, Australia. China is kind of, they have an interesting economy. So yeah, like I feel like it's a very US phenomenon. So something about the US is different. I'm not really sure why.
And I guess now that you mentioned like emerging markets or foreign markets, how do you think, I guess, like U.S. markets compare to foreign markets, like with the current economic state of the world, with like a lot of tariffs being put in place? Do you see any, I guess, market trends, or are you expecting any significant changes?
With the tariffs, it's interesting, right? Because it makes the markets less efficient. If you, for example, let's say you want to make, you know, your third culture coffee down the road, and you sell coffee, like you want access to the best coffee from anywhere because at the best price. And what tariffs do is like they kind of distort that piece of it. So now you kind of have to, like, instead of going to the best place, you kind of have to either pay too much for that or you go somewhere local. So it'll help boost the local economy, I think, but it will make the markets less efficient. Philosophically, there is an argument to be made about, like, okay, like, you know, a less efficient market could mean more jobs. A hyper efficient market may not need as many jobs. So maybe there's that aspect to things, but like just from a purely economical point of view, it does make things less efficient.
So there's definitely like some sort of trade-offs.
Yeah.
Okay. And I guess like related to emerging markets, how have you seen tariffs affect emerging market pricing or foreign market pricing overall?
Emerging markets, so for example, Germany and like a lot of the European and like emerging markets have gone up in the recent past. And a lot of that, I think, you know, with the whole April, you know, with the bond drama, I don't know if you followed all that, but basically what happened was like you had the long-term bonds, 10, 30-year bonds were falling at the same time the US dollar was falling, which is very unusual because usually what happens is it's like inversely correlated. If the bonds fall, the dollar goes up. So the yields, when the bonds fall, the yields also rise. So basically the yields were rising when the dollar was falling. And so looking back, it's basically the money was moving outside of the US to like other places. Long term, I'm not sure how that would play out just yet because it's still like early days. Like it's really hard to tell what's going to happen with that sense. But it is like very unexpected, unusual territories and dollar's been devalued to over 10% this year. You know, something like 10 to 12%. So imports will get expensive, not just because of tariffs, but also because dollar has gone down. Whereas emerging markets have become, their stock markets has been going up. So it's an interesting dynamic. I think it'll take a year to play out, and maybe we'll get some better trends in the future.
Sure. So just have to wait and see kind of for the longer term results. Now, I guess I'm sort of going to be switching the topic here a bit. I was wondering if you had like any experience in like decentralized finance or knowledge about like DeFi, whether it's like crypto or Bitcoin, like that whole entire space.
That's not my spot. Honestly, I haven't looked into that too much. It's not something I'm an expert in. So yeah.
Of course, so you're more like oriented towards like traditional.
Traditional, yeah.
Okay, I completely respect that. There's some sketchy things in cryptocurrency for sure.
It is interesting though, like because like I was a Bitcoin skeptic for the longest time, But at some point you have to change your beliefs, right? Like if it's like it's been like 15 years now since what 2009, right? Like when did Bitcoin? Yeah, and over that period of time, like it's been resilient. There's like nothing's been hacked, nothing's been compromised. Like it's working fine. Like so my views have changed, and I see Bitcoin as kind of like digital gold, less as a currency, I think. And also like when inflation. Even during like if you look at a long enough time period, like even during inflation and stuff, like Bitcoin's been going up, like so. And I think this year it went up, like it was correlated with gold, right? So it's like that's so my views have changed, evolved in that sense.
Also on that note, I think you mentioned this earlier, but like there might be some shift to like the traditional like 60-40 like stock bond like split. Do you think that maybe crypto in the future could be implemented as like, or could or should be implemented as like I guess a go-to investment in like personal finance or just financial literacy classes that should be taught that way?
I think it should be, but I feel like my view of Bitcoin, the issue I have with Bitcoin is that it's a zero-sum game, because it's only limited set, right? Like there's 21 million something Bitcoins, and that's it. That's good because it helps you not devalue currency, but it also makes everything a zero-sum game. It's a good thing about fiat currency, which is it's a trade-off, right? So it's like, yeah, you devalue the fiat currency over a period of time, but it also means that it's not a zero-sum game. So if you're a business, like new businesses can come along, like Nvidia can go from like 10 billion, like $100 billion business to a $4 trillion business over 3 years, without having other businesses go down, right? So it's a positive sum game. Like in terms of the economy, like everybody can win with the fiat currency system. But with a Bitcoin-based system, it's like for you to gain more Bitcoin, someone else has to lose some Bitcoins. So that's the tricky part, which I'm conflicted about.
So like I guess limiting supply of it makes it a little bit.
Yeah, like socially it makes it like, what does it mean, right? So it means like it kind of limits if we were all to trade in Bitcoin, let's say like there was no dollars, just Bitcoin. Companies would only move, I don't know what that would, because like for a new company, Nvidia wouldn't be Nvidia today. Neither would any other startup. Like OpenAI wouldn't be OpenAI, because like for OpenAI to be OpenAI, it would have to take away from other older companies that aren't doing so well. So they might have to go bankrupt. So like, whereas today, like we can just increase the money supply, the empty money supply, and the older companies will still operate fine, and we have the newer companies.
So there's definitely like some conflicts with it becoming like, I know a lot of people talk about this like the new reserve asset. I think El Salvador tried to implement it. So there's definitely going to be some roadblocks before that like fully happens, right?
Yep.
All right. Well, I guess before we wrap this up, because we're reaching the 1 hour mark soon, we have one final question, which is like what's some advice that you have for students trying to get into finance, or I guess not just students, but like people in general, and yeah.
So I also have a bunch of these things that I wanted to talk about. I wouldn't just like focus on fundamentals, right? So like one of the things is like the effect of compounding. It's so powerful. Like you don't see it on a day-to-day basis, but over a period of 5 years and 10 years, and you look back and you're like, okay, that was compounding, and it's like we're talking about like 10x, 100x returns. That doesn't happen over weeks and months. It happens over years, right? And it's just compounding. The other things is like, for example, a principle of asymmetry. Like, so we track things in percentages, right? Okay, this went up 5%, went down 5%. But the up and down, they're not symmetric. So if $100 up 5% and then, or down 5% and then up 5%, or up 5% and then down 5%, it doesn't come back to 100. It's a little bit up or down depending on the order of which that happens, right? So that is important too. So it's like, for example, if you're 100 and then down 90%, right? Now you're down to $10, and you have to 10x to get back to 100, which is like 1,000% return. Yeah. So that's the issue. So that's one of the things. Knowing what options are. Option pricing, Black-Scholes, even if it's not like the mathematical formula and like how it's derived, just an intuitive sense of what it means. Like, what is it really measuring? Some other things like, for example, price elasticity is a really good concept to understand, right? It's just like there is some rhetoric about like corporations just keep increasing prices because of greed, but it's not really greed, it's about price elasticity, right? It's like if the price is inelastic, then they can't really increase the price. That's one of the things. Phillips curve, like, things in relationship between the jobs and inflation. Things like competitive mode, right? Like how do you measure competitive mode? And game theory is super powerful. Like, how does a company respond to competition? So it's like a bunch of there's like core principles, I think, and fundamental concepts that if you understand, these are tools to like really see what's happening in finance, I feel like, and gives you that clarity, mental clarity.
I completely agree, and I'm also glad that you mentioned options, because I know a lot of people either overlook options or use them like incorrectly, because obviously options are supposed to be used as a hedge, or if you're like going to sell them and do some like sort of theta wheel or something like that. And I know with like the current trends in the internet, people are sometimes gambling naked options, which is definitely a good thing. So thank you for bringing it up for sure. I really appreciate that. And I guess that wraps it up. So thank you very much, Mr. Ahmed, for this interview. I learned a lot from it. This is not really or data science, I guess, is not really my area of expertise, so I definitely learned a lot about that, and I'm sure the viewers at home did as well. And for the viewers, you can tune back in on more West Bank interviews on our YouTube and on our website, and we'll see you next time. Thank you.